Welcome to the Jones Zone, a podcast by Darryl and JJ Jones.
Hello, everybody. Welcome to another episode of the Jones Zone. Today, we are lucky to have Kenneth Carson. He's a homeowners insurance agent.
Thanks so much for having me. My name is Kenneth Carson. I'm right here in the California region. I work for an agency called Comparion Insurance Agency, but we're simply the exclusive broker channel that was created by Liberty Mutual. I think at some point a few years ago, especially as some of these things were changing, California specific, somebody had the crystal ball at that Liberty Mutual corporate office. They knew that at some point we're going to stop winning. And we've got to have options. And if we don't, we're in a position where we're going to lose. And they figured out a way to partner with almost all of our competitors and created a broker platform out of it. Now, in the process, they had to create a new brand name. But in the end, it's simply us. It's our Liberty Mutual system in our new broker format.
And maybe for those that may not understand completely what being a broker is valuable to them, is it allows you to search out different insurance possibilities for your clients, opposed to just one product.
Yeah, that's exactly it. In the past, I was stuck with just my Liberty Mutual system, which was wonderful with their pricing at the time that I started 10, 11 years ago. But, when someone would call and I've got their auto, their home, their life insurance, their umbrella policy, and they go buy a vacation home in Lake Tahoe, for example, or down in Big Bear, and Liberty Mutual wanted nothing to do with that region, what's stopping that person from taking all of those policies and moving them to an outfit that can handle it? And now we've resolved that issue because I'm no longer stuck with that one brand and we've got the choices.
What has happened since the fires as far as, well, I'm just going to leave it at that. There's the ball. Go ahead and see if you can hit it out of the park.
Well, I mean, I'll put it nicely and say it's chaos, because it's not even organized chaos right now. But really, the wildfire element in California, it's been on the insurance carrier's radar going back to 2015, 2016. I mean, we can go all the way back to the wildfires in Santa Rosa in Northern California. And the reason why is because that was an area that was not on the insurance company's radar. But when you have a 60-mile-an-hour gust of wind, take that fire, pick it up out of the mountains and drop it right in the middle of the neighborhood, now you've got the insurance company's attention. And now they're starting to pay attention to variables that they didn't look at before. So as this continues to happen every single year, the insurance companies have to react, because there's no business math where it makes sense that my $2,000 a year in premium is going to be sustainable when you've got to pay me $800,000 because something happened to my home, multiplied by every home in this neighborhood that was destroyed. And so now we're in a bit of a situation where it's created complete chaos. We've got insurance companies leaving, we've got them non-renewing, or we've got them pricing people in a way that's trying to force them to go elsewhere.
Well, let's talk about that. What is elsewhere?
Yeah, and that's the hardest part, is because as we've evolved into this new system where I've got options and I've got a dozen, well, if 10 of them out of the 12 are telling me we don't want that zip code, and the other two that are left are saying we don't know if we like the age of that home, and the plumbing might be old or the roof might be old, and then my last one is saying we don't like that giant tree that's overhanging the roof. Who the heck am I left with? And we've got this whole last resort issue with California Fair Plan, which has been a hot topic. And now we're seeing that California Fair Plan is becoming overexposed. And what do we do in a situation where none of the big companies want it, none of the small companies want it, and California Fair Plan is saying, please don't put it with us, but we're obligated to because we're the only ones left.
Well, and let's talk about California Fair Plan, because it has been a go-to for some clients of mine and transactions that I've dealt with. In fact, I was really surprised a few months ago. Because I always thought, okay, well, last case scenario, we can go to California Fair Plan and you'll be able to get insurance. And lo and behold, this particular house was uninsurable by California Fair Plan, and I was shocked. And I asked your partner about it, and she had mentioned that, well, apparently California Fair Plan does have some limitations due to the fact that, and maybe you can explain it better than I can, but there's, let's say, a square mile or a tract of homes or whatever, and they'll only insure a certain percentage of those homes. Is that, did I say that right?
Yeah, we're starting to get down into some of the fine nuances with Fair Plan that have never really been a thing in the past. In the past, if it was the option and the only option that we had, we push the button, we send the quote through, and it's done. But now we're starting to discover, as they're requested more often than they ever have been, we're starting to see that they do have limitations. They'll give us a ceiling and the maximum amount of coverage that they'll offer. So if that number hits that ceiling, they immediately reject.
And when
We
you say
do.
that ceiling, you mean, is that because that could be taken a couple different ways. Is that the percentage of homes in a particular area or track, or is that what is covered? Meaning maybe they'll cover, and we could probably delve in this a little later, but just, yeah, what does that mean by ceiling?
Yeah, so right now we're not worried about too much about the exposure in any particular zip code. We have not run into that issue. However, we've run into the issue where there's a coverage ceiling per file. So if I've got this large home in Malibu and it exceeds the maximum amount of coverage that they will offer for a personal policy, which is 3 million, once I get through the dwelling itself, and that's already hit 2 million for the estimated rebuild cost, and then we factor in the personal belongings and the relocation expenses and everything else that might be required. Once we hit that $3 million ceiling, California Fair Plan says even we have a get out of jail free card, and now we don't want it either. And that is where we're running into an issue with some of the high value homes across the mountain regions and in some of these nicer neighborhoods in Northern and Southern California.
So it's the amount of money they'll cover. So you've got a $10 million
Correct.
house, you're out of luck. They'll only do up to 3 million. How about this? I mean, gosh, we've got a lot of topics to cover here.
Yeah.
But what about like an umbrella policy or a supplemental? Are policies like that also covering houses?
Yeah, we've started to see some of what's referred to as surplus or non-admitted carriers enter the marketplace. Now, most of them have walked out because they've had their eyes on these wildfires too, and they've already been insuring homes in these regions. They've already taken the major losses, and they've used that as their opportunity to say, California, we're out of there. We're okay in Louisiana and Florida and Texas dealing with the hurricanes over there, but we are not coming close to dealing with those wildfires anymore if we don't have to. Now, we've seen a few other of those surplus carriers, which essentially means they are not yet on the standard carrier list in California, so they don't operate under the same governing rules. What that can also mean is in the event of a major catastrophe, they may run out of money. So when we're looking at some of those surplus carriers, while they may present a solution, and if I want to get that deal closed, it's tempting to use that as an option. We've got to know that on the back end, when it comes to claims handling, they may run out of funds and I could be in a situation that was even worse off.
But so really, a large. I mean, obviously, there's the reason of people don't want to lose their equity and lose their home, but it's also a mortgage lender requirement. So the lenders are requiring that you have insurance. You know, people may or may not know this, but if you don't have a mortgage on your house, you actually don't have to have insurance. It's when you have a mortgage on your house. So where I'm going with this, how have the mortgage or the bankers been scrutinizing this additional insurance, or have they?
Yeah, and this has been huge. And this has been something that I've asked even the resources that I work with up and down the state on the mortgage side, because what we're running into is a lot of folks who, great example, they're living in some of these foothill regions that have been labeled wildfire zones in the last year. They're on a fixed income, they're retired, they've got all of their expenses settled down to the penny. And out of nowhere, a notice comes from the insurance company they've been with for 10, 20, 30 years that says, we're out of here. And your only choices are an option that are 3 to 5 times the cost. Now, not only does that have an impact on the household budget, but we've asked our mortgage resources, how does that affect that policy? Because that's perhaps in what? Their impound or their escrow account. And so when that account is suddenly shortchanged because the insurance piece of the puzzle is 3 to 5 times the cost, that can do some damage on that loan. And they perhaps may need to reformat that payment to account for this new expense that's much higher than it's been in the past.
Well, and you may not know the answer to this, but I'm just curious on even them allowing it. Number one, not only, I mean, you bring up a good point about escrow accounts, et cetera. Another question I think arises too is if I remember correctly, when, for example, happened many times, and again, you may or may not know the answer to this, but let's say a person, because whenever you buy a house, you get a loan, the lender's going to require you to have an insurance. Okay, boom, you get your insurance in place, and then 5 years later, I don't know, for whatever reason, you let your insurance lapse or whatever, then the mortgage company implements their own insurance on the
Yeah.
property and bills you. Do you know what the mortgage or the bankers, let's call them the bankers, mortgage companies, bankers, are using as their insurance? Any ideas on that?
I love this question because this is only something that's been brought to light because of this issue. Normally, what causes a lapse is some sort of billing issue. There was a lender miscommunication. The escrow payment didn't get made in time, and the lender can say, "You've breached your contract. We've got to now force place our own format." Now we've jumped into some of these force place policies to see what they are and to see what carriers they're using. They're definitely a surplus carrier, so they're one of those non-standard companies, but they also just protect the interest of the bank. They don't care about your personal belongings. They could care less about any personal liability issues that you may have because of the swimming pool in the backyard or this particular breed of dog that you own. They are just concerned with the structure of that home and the damage that might be or that might occur to that only. So what you need to know as a consumer is if you're in a situation where you have a forced place policy, you got to try to get out of that thing because it's not really protecting you, it's protecting the bank and their interest in that building and that building only.
And that's going to be just based on the value. So
Yeah.
they're all okay. So it's just based on them. Wow. Now, okay, I'm kind of going to come off left field here just because that's how my brain works. But now I heard somewhere, someone I thought mentioned, for example, was it Lords of London? Is that an insurance company?
Yeah.
Now, are there any sort of foreign, I guess we could call that a foreign insurance company? Are those playing any sort of role in any of this? And sorry, this is kind of left field, but whatever.
Yeah, and that's a good question because we've got to get creative. The issues that we're seeing right now, we've never seen before, and they're just compounding and they seem to be getting worse. And all of us in all the respective industries, real estate, mortgage, insurance, financial planning, we've all got to get creative. And just us as consumers have to figure out how to resolve some of these issues. So it's a great question that you bring up. Are there any other like international insurance interests that are coming into play here? We do see a few new carriers, really nothing as far as overseas. However, there are some overseas carriers that offer what's referred to as reinsurance, and that's the financial backing that's being provided for the big corporations, so that in the event of the Pacific Palisades fire and a company has billions of dollars in exposure, they even have a trigger or a lever that they can pull that says, "Hey, we need to use the insurance on us insurance companies because we're going to have a hard time finding where this money is going to come from." But as far as to us as the end consumer, we don't really have many options left, and there don't seem to be any new players that are coming into market.
Wow. So what has caused this? I mean, obviously, I mean, we can simply say fires, but I mean,
Right.
it's more than that. Who's managing these fires and why I mean, California is not the most forest, or what am I trying to say here? There are other areas in the planet that have forests that are far more abundant than California, that are drier than California. And have they had this problem? And if not, why not? And what can be done about it? Any
Yeah.
thoughts on that? Again, I don't, I don't know how much you know about this, and
Sure.
forgive me. It may be a bit, it's over my head, so it may be over your head. But what are your thoughts on this?
Yeah, and really what we've been dealing with, the shortest answer is it's a perfect storm in California right now. We've had so many factors that have come into play. We've had the wildfires dating back to, let's say, 2015, 2016, just to keep it in the last 10 years for easy reference. Now, in those last 10 years, we've had what, seven, eight, nine of the most damaging 10 fires in California history. So there seems to be a shift, and whether or not we want to acknowledge shifting in the climate or what have you, really what's happening is we've got disasters here that are causing a ton of damage. And it's doing that within a window of time that's fairly recent. And the insurance companies cannot react fast enough. When we were going back to the beginning and I was talking about being in business and how can I make math make sense, if I've got this policy premium coming in and it's $2,000 on average per home, but then as a claims adjuster, which ironically I used to be, I'm cutting a check for 750,000 or 1.5 million
I was going to say
multiplied.
750 is tiny, but go ahead. I'm
Yeah,
sorry.
yeah, that's okay. And multiplied by every home in that zip code that's been damaged in this one particular incident, you can see now why these companies are so quick to pull the plug and say, we just cannot continue to bleed as much as we've been bleeding. And if we know that these events are going to happen every summer, or in this year's case, in January, we were completely blindsided by that. If California is going to have the level of devastation on the wildfire side, like Florida and Texas and Mississippi and Louisiana see on the hurricane side, then number one, we're either out of here, or number two, our insurance premium costs need to look like theirs do, which surprisingly is 3 to 5 times the cost of what it is in California. And the only folks that know that are the ones that have ever moved to Florida or Louisiana or Texas or Mississippi in those Gulf states.
So the people that are in charge right now are not, doesn't sound as though they're researching areas that have similar situations as California, meaning forest, dry weather, desert, winds, etc. Because we aren't the only place on the planet that has this these situations. And I mean, you take other countries. Again, I'm above my pay grade. Forest management comes to mind. Water, having accessible water. Can you speak to that? Again, I don't expect you to be a forest expert,
Sure.
but any thoughts on that?
Yeah, and I really think it has to do with our desirability to build in some of these areas. Now, if we are building our home in the middle of a forest, then obviously it's going to be much more susceptible to even something like a tree falling on it versus being in the metro grid area where there are no trees. And the insurance companies are pretty aware, and they could price things accordingly based on those different risk factors. But as our development starts to move into areas that are difficult for fire equipment to access, or are more susceptible to a 70 or 80 mile an hour sustained windstorm that's going to move that fire wherever it needs to go. If we're seeing new patterns that the insurance companies don't have 100 years worth of data to analyze, then they're going to be in a bad position, and it's really going to be too little too late. So I know that the discussion about forest management has been out there. I know the discussion about water accessibility has been out there, but that's kind of a microclimate thing for one particular incident, where that debate can, of course, be brought to light. However, when we're looking at what the insurance companies are trying to do, they're trying to analyze data. And right now, if in the last 10 years this data is skewed in one direction, they have to make an emergency decision based on these last 10 years versus 90 plus years prior to that, that this has not been an issue. So now we're in a situation where one of the biggest companies, actually the biggest company in the entire state, said 2 years ago, we're out. We're not doing any new home insurance anymore. And as that large domino fell, all of the other companies behind them said, well, if you don't want to do it, we don't want to do it. We would have loved to see you make the fall. Well, they've taken the fall. And now the other ones that are left are dealing with this increased pressure. And one by one, even some of those smaller companies are saying, we don't want the extra exposure. Let the giant company do it. Look what happened to them. Do we want that to happen to us? And who suffers through all of that decision making? Us as home buyers, us as the end consumer, because we have less resources to use, and the ones that are left are astronomically priced.
So bottom line is, it's just going to cost more to live here in California.
That's it. That's it. If we are dealing with natural disasters that are as destructive as what we see in some of those other states that have hurricanes and tornadoes and hailstorms, for example, then our pricing to protect against those natural disasters is probably going to have to resemble what those other states deal with.
Until because if you think about it, those areas that burned, those were some 60, 70, 80-year-old houses.
Yeah.
So they didn't burn 30 years ago. They didn't burn 40 years ago. They didn't burn 50 years ago. They didn't burn 60 years ago. So, or there is some new management in place. I mean, I don't know. It just seems to me is that they're going to need to somehow come up with some way to manage these fires better because they're not areas where they built into new areas. I mean, like you make sense to where, hey, you put
Right.
something in the forest. Well, okay, you never lived in the forest. All of a sudden you got that. What are the politicians doing about this? Are they doing anything other than pointing fingers?
If anybody's ever been familiar with that little cartoon picture of the three Spider-Men and all three of them are pointing the fingers at the other two, that essentially is what's happening right now. You've got insurance carriers, you have this consumer watchdog, and you have the Department of Insurance. And all three of them are just pointing at the other two. You've got issues with the insurance carrier saying, please let us raise our rates so we can maintain as a sustainable business.
So they're arguing math.
Exactly. You've got the Department of Insurance that's pushing back on that, looking at trends with financial results. And they may be saying, yes, you can take a rate increase, or no, you can't. Or go over to those guys, go over to the consumer watchdog and ask them. And that consumer watchdog is more of an advocate for us as consumers. And they're saying, no, you're doing just fine. You leave your rates exactly how they are. So it's all full circle. And then the insurance companies just say, well, forget it. Then we're just going to pause doing what we're doing in California. We're not going to do any new business on the home side. Good luck to both of you taking the political heat when the consumers start to suffer.
One thing now will take a little bit of a turn. I did know you mentioned this a little bit earlier about fire zones, I think is what you said. And I did notice that I think my wife had shared with me the new drawn out fire zones, that those have been revised in California. Is that correct to say?
They can be, but this is all subjective, and this is something that it can become a little bit frustrating in my industry, especially with the industries that complement ours, like real estate and mortgage. We are constantly receiving requests to quote new homes in certain regions, and we've noticed this third-party report that has been coming with the request for the new quote, something called a natural hazard disclosure, something along
Yeah.
those lines.
Yeah. We have to do those. But go
Yeah,
ahead.
and we've seen those come in as if they are the leverage that says all of your insurance companies better insure this home without issue, because look, I've got this natural hazard disclosure that some third party vendor determined their own line in the zip code and said this should not burn. And so the insurance companies are having a hard time, and they're looking at those reports and they're saying, first off, who are you? Because until you start paying out the billions of dollars in losses that we are, we're going to take that report with a grain of salt. We have our own fire maps. We know where our risk is at, and we could care less what natural hazard disclosure is telling us about their opinion on wildfire until they're willing to open up their wallet and pay the claims that we do. So that has been a big topic of conflict as we start to work on new quote requests. Is we see the report, we understand that that vendor, whoever that is, has their opinion. Now, on the flood side, they can pull that information because it's public. FEMA has it printed. But as far as a fire map, that's all opinion based right now. And the insurance companies have their opinion, and it's going to differ drastically from those natural hazard disclosure reports. And the insurance company, those are the word that goes at the end when it comes to determining whether this home is going to be in their wheelhouse or not.
That's actually what I'm talking about. I think it's the insurance, and I'm not arguing with it. Frankly, I get the insurance company's argument. Frankly, I mean, math is math. I mean, there you can't 2 + 2 is always going to be 4. You can't do anything about that. So, but I've noticed that, for example, I ironically happen to have a good handle on this because of personal experience. I actually lived. Well, as of last year, the house next door to me was in the fire zone. We weren't in the fire zone. So our insurance literally was less than our neighbor that was 20 feet away. So now my wife was showing me how it's just, and I don't blame the insurance companies. They kind of have to do it. They're coming up with solutions. It's like, well, we got to, the fire zone is just much, much bigger, meaning, which basically translates into, okay, now you have to pay more money in insurance, which again, I understand it. I get it and everything, but so we've got the California Fair Plan. Are there any, and that's somewhat limited. We have supplemental and or potential new players coming in. Do you say we do have new players yet or not yet?
No, for the most part, the newer players that are entering the market are those non-standard or non-admitted carriers, which for special cases we can use. But once again, there's that big bold print on those contracts saying we're not governed under those California rules, so buyer beware
How
is
about,
really what they're trying to say.
are there options too to where, and again, this is probably something the banks, the lenders have to prove, where you can limit, maybe get different insurance. I'm kind of trying to think myself out of the box. I don't know why I'm trying to solve this problem. I guess it's just something we can discuss, but, have one insurer just do fire, one just do floods or leaks, plumbing, one just do accidents, trip and falls or whatever. Is that a possible solution where, of course, while I'm saying that, I repeat, I guess the lender's got to be okay with it. But
Yeah.
are there any solutions like that are coming up where you could just limit what this one particular insurance company's liability, so they're not responsible for anything other than fire?
Right.
Something
And
like that?
yeah, and it's pretty creative, and that's essentially how California Fair Plan came to be, is because we needed a pool that says you're only going to handle the fire stuff because us collectively as the other standard companies, we don't want it. We'll handle the plumbing losses and the liability losses and theft and vandalism, etc. But if there's a fire that comes through here, we simply cannot afford to pay these full losses. So can you handle just that piece of the puzzle? And that's really how California Fair Plan came about. So
Part 2 comes out next week. Stay tuned, only on the Jones Zone.